we launched the trial of our CBDC project. It was indeed a landmark moment in the history of money, in the history of currency in our country. Going forward, it will be a landmark moment. It will be a landmark achievement so far as the functioning of the entire economy is concerned. So in that sense also, it's going to be a major transformation of the way business is done, the way transactions are conducted.
The governor is not indulging in an exaggeration. This is a transformational moment. India's digital currency, not crypto, central bank digital currency is here. At the moment, only 9 banks know how it works. That's because the Reserve Bank has selected these 9 banks, SBI, Union, BOB, HDFC, ICICI, Kotak, Yes, IDFC and HSBC, to participate in an experiment, in a pilot. Now, these 9 banks have only been allowed to trade government bonds by spending money in CBDCs. So how is the pilot going? By when will all banks be able to trade bonds? And by when will you and I use the CBDC? For all these, I have with me 3 people who are actually in this pilot, who have been invited into this pilot. Raghavendra Balakrishna, the DMD at SBI, B Prasanna, Head Global Markets Group at ICICI Bank, Amit Sureka of Yes Bank. Also joining us is Venkat Chalasani. He's former SBI DMD, was in their treasury and also a board member at CCIL. The CCIL is the body which acts as an exchange for bond trading. Okay, so I think we have the most appropriate set of people to describe what happened to us. Let me start the discussion with you, Mr. Balakrishna. If you can tell us just what is happening in the pilot. I mean, I assume you have to first transfer your Rupee account in RBI, transfer the money into a CBDC account, into a digital currency account?
Yeah, what we did is that initially certain amount, which is lying with RBI under our CRR quota, we have transferred to an RBI NSDO CBDC account. There is a digital account, exact money we transferred some X amount. It has been created in our CBDC digital account in the form of e-rupees. And once that platform is live at yesterday, we, among with other 8 banks, total 9 banks have participated. The bank, we did the first deal. The bank who want to do some trade with us, they bought from us, they sold, and we bought from them. What we did is that equivalent amount money, it has been credited by them to our CBDC account. And we, parallel it happened, our concerned security is debited from SGL account and transferred to their account. So settlement is instantaneous and we can able to see our balances in digital currency instantly updating.
Okay. Prasanna, can you add anything to this? I was told that the NPCI is involved, that the CCIL was also involved. I thought we were going without CCIL's help, but CCIL's screen was also used. Any more details you can give as to how this is working?
Yeah. So first of all, Latha, I think compliments are due to the Reserve Bank for thinking through this case and deciding to do this pilot for wholesale CBDC and using government securities as the first use case for really using the digital currency. And when it comes to payment and digitalization, I think as a country, we are way ahead of the world and in terms of person-to-person payment or even person-to-merchant payments. And I think something like that is going to be hopefully happening on the wholesale front as well. So like Raghavendra described the process pretty clear. I think what has happened is banks have opened a separate CBDC account with the Reserve Bank. And apart from their normal, INR current account that we have, and the SGL account for the government securities is the same SGL account that we already have.
Yeah.
But now, like you said, NPCI, there is now an NPCI portal which has been created that allows banks to put in requests for converting their INR balances with the RBI from their current accounts to the respective CBDC account and vice versa. And again, you said there is a separate Indiazome environment which has been created by CCIL, where these 9 banks who have been chosen have been a part of the, have been given that environment. So start of the day, the banks convert the INR into CBDC. And once they have the CBDC balance, they can actually trade on this pilot Indiazome on stocks on which the banks have a clear balance. The trading is actually through the platform, the RFQ platform, which is built by CCIL, and it is bilateral. There is no CCIL guarantee for the trades which are happening on that. They settle gross, but they settle instantaneously. So in this environment, actually, Latha, we are actually going from a T+1 settlement in the current process, from what you can probably call as a batch processing that happens at the end of one day where net settlement happens, to a T+0 and instantaneous settlement. So you really see when a transaction is hit on the screen, you get the current account debit. If you bought securities, you get the debit on your current account with the CBDC account, and you get a credit on your SGL balance instantaneously. That's what is happening in the.
Okay, so if you're getting the guarantee, I mean, if you're getting it instantaneously, you don't need CCIL guarantee. Right, Prasanna?
Yeah, you can argue definitely like that there is possibly no need for a guarantee in terms of this particular way of executing, because it's instantaneous. But having said that, I will also add that it is actually possibly going to be an option which are given to the banks going forward. I mean, you can either choose to deal in the parallel environment, or you could possibly, I mean, that's what I'm guessing. I really don't know how things are going to be. I think we're all meeting and talking about this at very early stage of the evolution, but definitely something very positive. A lot of things are changing, and government securities settlement also being a part of the evolution.
Yeah, no, I agree with you. Technology initially, moves slower than we expect, and in the longer term moves much faster than any of us expect. So I know we are trying to outguess, but Amit, what is your best guess? Do you think that it will become all banks in all bonds very soon? Is the system in its second day giving you that confidence?
So Latha, first of all, the way RBI has driven this entire implementation of CBDC wholesale, that itself is too commendable. I mean, they have taken an incredible effort to make this happen in such a short time frame. And I would echo the thought shared by Prasanna on this. Now, in terms of further expanding it to non-GSEC and even the GSECs to other other participants in the market, probably RBI is already working towards it. And in probably very short time frame, at least the GSEC wholesale CBDC settlements should be able to move to all the banks in terms of participation, and we will see the trade volumes and the trade counts happening on this platform very soon. As Prasanna also mentioned, the T+0 settlement definitely helps banks in terms of getting the securities instantly, unlike NDS OM where the settlements are T+1, and elimination of intermediary, in terms of whether CCIL or any other intermediary, that is possible. So when we move to corporate bond CPCDs, probably there are other intermediaries in terms of account transfers of demat in demat for bonds. Those intermediaries also will have to work with RBI for this to happen for bonds and CPs and CDs.
That you brought it nicely to the question that I wanted to ask Venkat, because Venkat, you are the only person who has been a board member with CCIL. See, normally we trade with the exchange. I'm speaking to a largely stock market audience, so we understand that. We trade with the exchange. Even if I am buying from you, I don't know I'm buying from you. I am buying from the exchange and you are also selling to the exchange. If we start bilaterally doing it because it is CBDC, then does a time come when we dispense with CCIL?
First of all, as I echo the sentiments that have been expressed both by Amit and Prasanna, it's very commendable. On 7th of October, they came out with the concept paper, and 1st November, we have introduced it. Globally, if you look at the way in which India has moved forward in the digital payments, it's really great. And we look forward for the way in which the CBDC is going to be implemented across the country now. And of course, for the interbank payments, which is going to happen very shortly. But having said that, one of the important things that we are talking, the point that you raised about the CCIL's role, there are two ways in which it's going to be impacted. As our colleagues have mentioned, it's going to be a real-time cross-settlement which is happening.
and the commission and the margins. One, the commission which the CCL is going to earn is not going to be there now for each of the transaction. And the second thing is the margin money that we are going to post, because it is going to be DPV or various other settlement mechanism. And on the T plus one mechanism is going to come as T plus zero. I'm going to see it instantaneously in my account. So both these factors are going to be changed. And to that extent, CCL role is going to be diminished. When it comes to the other instrument which you talked about, these are both bilateral and OTC, over-the-counter products. And therefore, we need to have more of integration with other market players, be it in RTGS and others.
Okay. Oh, yes. Oh, yes.
But,
Yeah.
but
As even
what happens is, Latha, when you're looking at the retail investors, then you talk about tokenization. I think that's the next step.
I'm coming to that. Yeah, because that is what I think the viewers really want to know. When am I going to have, a wallet where I put digital accounts? I don't have to carry my physical wallet. I'm only carrying my phone. That question in a minute after the break. Welcome back to the special Indianomics, where we are discussing one of the biggest events, possibly transformational events for the Indian economy, the launch of a digital currency. I've been speaking with bankers who are actually involved with the pilot project that the Reserve Bank started this week. I have with me SBI's Raghavendra, Balakrishna, ICICI Bank's B Prasanna, Amit, Sureka of Yes Bank, and Venkat Chalasani, formerly of SBI and board member at CCIL. Gentlemen, thank you for your patience. Okay, now we know that the bond markets will perhaps trade more extensively with CBDC in the days to come. What about corporates? Let us stick with wholesale before I come to the individual. Mr. Raghavendra, if you can give some idea, do you think corporates will use this system in a very big way because they're already savvy?
Definitely. See, the here issue is that other person, unless I'm sure he will honor the settlement. Likewise, we have so many limits with corporates. For example, I'm heading corporate accounts group also right now. So any corporate, when we are dealing with, we allocate some limits. So as a certain process of assessment, we can give some limits to them. They can trade. And more good thing is, if it is somebody and if I want to do it, a cross-border also can be possible down the line, provided their rupee is funded here. And it is T plus 0.
Do you expect that corporates will take to this like fish take to water?
Okay. So, Latha, I think your second question first. I think the motivation for CBDC world over has been broadly cost reductions and increasing efficiencies, shifting to a cashless economy, possibly easing cross-border flows, easier remittances, and an alternative to private cryptos or stable coins at the end of the day. I think this is RBI's answer to stable coins. Now, if you look at the discussion paper released by RBI, it is clear that CBDC will have sovereign backing, but banks will continue to do the servicing and distributors will be involved in the issuance and distribution of CBDC. And if you really see the entire system, you see banks are in the middle. With RBI on one side and customers on the other side. And the customers on the other side could be corporate customers or it could be retail customers. And for centuries, we have all been taught that a central bank is a banker to a banker and is a banker of the last resort. So according to me, this disintermediation that you seem to be alluding to is possibly not in the minds of Reserve Bank and let alone any central bank for that matter, because banks are the ones which are doing KYC, AML, etc. So the entire option of converting currency to digital CBDC is, according to me, only going to be given to retail individuals when actual physical issuance of cash is concerned, or it is going to be given to banks which are already having a current account with Reserve Bank of India. When it comes to corporates which are having a bank balance or which are having, I don't think this is going to be an option at all, because I think it's quite clear that the discussion paper also points out to the fact that they don't want to be disintermediating the banking system. And if you look at the narrative globally about how CBDC is developing, all the central banks have been saying that we don't really want to disrupt the banking system and we don't really want to go that route because the banking system is performing a role. And okay, you might argue that, okay, are they being paid enough, or are they being paid too much for playing that role? That's something only time will tell. And but I don't think that role itself is up for grabs. That too, especially a central bank coming in and playing that role. I don't think that's going to happen. Just quickly, Latha, on the issue of the CCIL and other point that you spoke about. I think as far as government bonds are concerned, I think the existing infrastructure on India's home and the CCIL settlement guarantee and all is working beautifully. And I think, like I said, every person is possibly going to be given an option of whether he wants to do instantaneous settlement using CBDC or whether he wants to be a part of existing settlement guarantee. And I think there is advantages for both. In fact, I don't really see one at the expense of the other. The real issue is actually real advantage can be really in corporate bond settlement, because that is where there is no existing clearing as a settlement guarantee which is happening today. And I think that is where if this instantaneous settlement were to happen, you don't really need somebody to come and guarantee corporate bond settlements. Okay. And actually, I can trade on that, the parallel screen of CBDC for corporate bonds, get settled immediately, and then I can go and actually sell it immediately. Okay. So I think that the big game changer can come in the corporate bond market. Maybe not in G6, and definitely I don't think on the entire customer balances that you're talking about.
Okay. All right. Got that. Yeah. I don't think the Reserve Bank also wants to open accounts for, 1.4 billion Indians. I don't think they are interested in getting into the retail or in any way disintermediating the banks. Amit, if we can let our imagination roll a little more, do you think the cross-border settlements will also happen? That is where everybody wants it to work.
Yeah, so Latha, as Prasanna mentioned, in terms of implementation or the use of CBDC wholesale in the G6 is limited, and I think that will only complement the existing system rather than replacing any of these. Okay. Yeah, the major benefit of this CBDC would be on the cross-border remittances side. India has around $87 billion of remittances coming every year. I mean, this is 2021 data from World Bank. Which says, $87 billion remittances, 20% of it comes from USA, right? So once this CBDC is adopted globally, at least by the large central banks, and it is also tokenized, I believe there would be a huge use case for reduction of cost in terms of cross-border payments and remittances, and reduction of settlement risk as well, and removing the country risk as well. Right now, the risks are on the nostrils of individual countries. So there is a huge scope for CBDC usage in cross-border remittances space.
Okay. No, I'll tell you the other thing that the governor said in the speech. He said, depending on the learnings from CBDC, they are wanting to launch digitized KCC loans, Kisan Credit Card loans. So they are looking at some kind of a retail use for Kisan credit cards. I'm not able to figure it out. Venkat, anything you can add in terms of future use cases?
One of the things I would just want to bring some clarity basis the concept paper which has been put in by the RBI is that the issuance is going to be a hybrid model. It's going to be both direct and indirect. Direct in respect of the wholesale banking, wholesale digital rupee, which has already been introduced right now in respect of this G6, and indirect where the issuance will be done by the intermediaries, where the banks will still continue to be there. So that's going to, and there are going to be two models. One is the account model, and then the second is a token model. So in respect of retail, we're going to have the token models. So let us be very clear, Latha, that even in respect of 1.4 billion people, it can be, CBDC can be used in the form of tokens through intermediaries and by the RBI as the main issuer. So that's how it works. So it's not that CBDC will not be used by the retail customers. So going forward, that's how it's likely to be there. And the second point regarding the cross-border transactions, as Amit had rightly talked about the value of transactions that are happening today. But the pilot projects are happening in two places. It must be aware, one in where China, Hong Kong, and even UAE and Thailand, together they're working on the cross-border transactions that's happening. Because one of the biggest challenges that's going to be there is interoperability of these systems and instant
Exchange rate.
The exchange rate.
Correct.
So that is something that needs to be worked out.
Yeah, no, it has to be worked out. No, I agree with you, Venkat. I'm sorry, my producer is prompting me to wind up. I agree with you that, even we are in discussion with MAS of Singapore and trying to make our UPI talk to their PayU. So maybe all these experiments, rupee trade, why only rupee ruble, is all being contemplated. Hopefully it will lead to something. Very quickly, Prasanna, do you think it will work at all for retail? The sheer extraordinary success of UPI should mean I don't need CBDC. No, I can pay you today. If you and I share a cab and I have to pay you, I can Google Pay it to you. Do you think the extraordinary success of UPI may make retail CBDC unnecessary? Prasanna.
So I think, Latha, it's too early to comment on what RBI is planning on the retail side. But what I'll just say is think about CBDC, like Mr. Venkat was mentioning, about something that is going to replace the cash in your wallet. If you are a person who are using cash and you are willing to look at it from a digital form, that's going to help you convert that hard currency cash that you are carrying in your pocket, and you will be possibly given CBDC through intermediary like your own banking app and things like that. So when it's like saying that when you draw cash from your banking account, your bank will be debited and you will get that hard cash in your hand. Similarly, when you do this transfer, your bank account will be debited and your CBDC account with RBI will get credited. So it's only replacing the cash that you wanted to hold in the first place and does not look at replacing the deposits in any case. RBI has been very clear about it. So that's one thing that you need to keep in mind. And I think, yes, retail UPI has been a great game changer for retail. So the incremental advantage of CBDC at the retail place is going to be far lesser. I agree with you on that. But the advantage it will bring to the wholesale part and to the fact that blockchain as a technology is the underlying one which is actually facilitating this instantaneous settlement. Think about it this way. If you're able to get instantaneous settlement on GSEX, and if it's later on taken to the cross-border and you're able to get instantaneous settlement on currency conversions, then you don't need to go through SWIFT, hopefully at some point of time, and maybe all those things can become much easier.
Yeah.
So I think that's where we should leave it and look for further measures.
I know. If we start thinking too much about it, it'll become Alice in Wonderland. But for the moment, there has been a wonderful start. Let's see where we go from here. Thank you very much, Mr. Raghavendra, Prasanna, Venkat, and Amit, for giving us some idea of how things have fashioned on the CBDC front.